How's it, guys? It's Linton here from Greenbox Markets. So I've had a couple of clients ask me how I'm doing my money management in terms of the $10,000 challenge trade. So I'm going to run through one of the trades that I'm about to enter live with you quickly and go through the money management with you so that you understand the mechanics behind it. So let's go and have a look at the pound-yen currency pair. I'm looking at this for a possible short setup based on structure that I'm looking at on the daily. So here we can see this impulse on the left hand side quite clearly, and then we've got a 1-2 wave structure, and I'm expecting the third completion down to the bottom over here before we see this impulse take place, the second impulse on the right hand side here. So I am expecting the price to pull back down here first, and then we should see the second impulse move from the bottom here up and out of the structure. There is the possibility, obviously, that we would get 3, 4, 5 waves before it goes, but because of this impulse here on the left hand side and this being the corrective structure over here, I am expecting the price to break out to the upside eventually. But for the time being, based on the daily setup, I'm looking for a short trade here. So I want to go down to the 4 hour quickly and just see what we're looking at over there. So here on the 4 hour, we can see that it pulled off the top of the structure quite nicely, and it is forming what we call the corrective structure or the retracement, which is exactly the same story. So we've got the impulse here on the left hand side, we've got the corrective structure, and we're expecting this impulse down to the bottom over here. So how do I get into this trade, and when am I going to get into the trade? Well, let me show you that quickly on the 1 hour time frame. So the corrective structure has formed 3 waves, 1, 2, 3. Now it's not a given or granted that this is the top of the third wave, but in terms of how the structure is forming, I'm quite comfortable to enter a position over here. Note that we could get a fourth and a fifth before the down, so that is a possibility, but I'm pretty keen to enter this trade over here and hold it to the bottom, move my stop into profit slightly, and see if it breaks on this wave or whether we get the fourth up. If we do get that wave up to the top here, what's basically going to happen is I will get taken out with a very small profit, and I will look to re-enter the trade over here for the longer position. If, however, I wait for that wave, chances are likely I may miss the trade if it breaks now, and I don't really want to miss that. So I'm looking at entering this trade now. How am I going to do my money management here? Well, firstly, I need to know where my stop level is going to be. How far away is it? And if I put my cursor on more or less where I would enter this trade at the moment, and I pull it up to my stop level, which is going to be just outside of this daily structure over here, we're looking at roughly 200 pips there. That's quite a reasonable stop, especially if we look at what the target is down to the bottom. Let's just calculate that quickly. So entry over here down to the bottom. Yeah, guys, that's about 1,000 pips there. So, risk to reward 125. Very, very happy with that setup. So let's have a look at how we're actually going to calculate the lot size that we're going to trade. So firstly, I'll go here to my FX book where they've got the Forex calculators, the position size calculator. It's a very, very useful tool. And here you can see that you can select the currency pair that you're going to trade, because obviously the value per pip on currency pairs are slightly different. So we're looking at the pound yen. I've got a $1,000 account, and my rule is that I'm not going to risk more than 2% of my account. Now what that means is 2% of $1,000 is $20, which means that I'm not willing to take a stop loss bigger than $20 on any given trade on this account at this point in time. As the account value grows, obviously 2% will grow, so my position size grows as well. So when it's $1,500, 2% of that would be a different ratio as opposed to 2% of $1,000. So at the moment it would be $20 that I'm happy to risk. At $1,500 it would be $30 basically. So we've got the risk ratio here, percentage put in. We've got our account size. Now I need to put in the pips. So 200 pip stop, that's what we're looking at, and then I click the calculate button. Once I click the calculate button, it tells me I'm only happy to risk $20 in this trade, so I don't want to take a bigger stop than that. It gives me how many units that is, and then it tells me what lot size I should trade, and there it is quite clearly, 0.01. And that is obviously the trade size that I'm going to enter on this trade based on my risk and based on my position sizing for this trade. So if I go here now to the pound yen, I'm going to put a new order, 0.01 position size, and I'm going to select the sell option because I want to go short in the market here. So there we go. We're in that position on the challenge, $10,000 challenge account right now. Remember what I said, as soon as the price gets round about to the bottom of the structure over here, I will definitely be moving my stop to entry or just in a little profit, so that if we do get that next wave up, if the price does this and we do get that next wave up, I'll be taken out here for a very small profit, and I will look to get short over there again for the longer trade to the downside. We're expecting this impulse move on the right hand side over here, and that's the trade that I want to catch. Hopefully that helped you with your money management, guys, and shows you how to accurately set it. I know a lot of people actually battle with it, but if you break it down to a percentage of your account that you want to risk, and you know how many pips you're happy to risk, you can calculate it very, very carefully, and you can exit into your positions accurately. So I'm just going to put my stop loss in here, and there it is. You can see all the way up to $20 gives me 222 odd pips risk. I want to have it just outside of this daily structure over here, so there would be a $17 stop loss on this trade. And if I put my take profit in all the way at the bottom here, actually let's go to a bigger time frame. Let's just go to the daily. So you can see there's my stop loss on the daily. I'm going to move it up slightly, $18. And my take profit at the bottom of the structure over here, where I expect the price to turn, is around about $87. So I'm going to keep that take profit in there, and what I will do is, as the price moves in my favor, as the price comes down like this, so I will move my stop loss further and further into profit, so that if we do get spikes back, it'll take me out and I can look for another entry down to this level over here. Once the price gets down to the bottom, we'll have to wait and see what it does over there, whether it bounces, gives us a flag and goes up, or whether it breaks, gives us a flag and goes down. I am, however, expecting this impulse to complete to the upside. Thanks for watching, guys. If you found this video useful, please give it a thumbs up and share it with your friends. Also, feel free to leave comments in the comment section below and let me know what you think about this video and any suggestions that you may have. And then remember to hit the subscribe button as well and the bell icon so that you are notified of any new content that we upload to YouTube. Trade with care, because Yellen is speaking again later today, so make sure that you've got stops in the market. Catch up with you tomorrow. Take care. Cheers.